In this video, we explore a powerful and unconventional perspective on investing, one that challenges traditional beliefs around stocks, debt, and economic growth. Most financial experts encourage people to invest in equities and debt instruments, but very few question the system itself. Today, we'll look at why blindly following the crowd can be dangerous, and why gold and silver may play a much bigger role in the future than most people realize. Let's begin with debt-fueled consumption. Modern economies are increasingly driven by loans. People take EM as not just for necessities, but for lifestyle expenses, smartphones, luxury gadgets, holidays, and social status. While this appears normal, it creates a fragile system. The real danger lies in compound interest. When borrowing becomes excessive, a point arrives where repayments become impossible, and banks eventually demand their money back. History shows us that such cycles never end well. Next, let's understand the difference between a real asset and a bubble. A true asset is defined by limited supply and strong natural demand. A bubble, on the other hand, has unlimited supply and demand that is artificially created. When we apply this logic to today's markets, uncomfortable questions arise. Several sectors, stocks, real estate, and even government bonds, are beginning to show classic signs of bubbles rather than long-term assets. This leads us to the idea of a global financial reset. Trust in the global financial system, especially the U.S. economy, is slowly declining due to massive and ever-growing debt. Countries across the world are selling U.S. treasuries and increasing their gold reserves. This signals a gradual shift away from dependence on the U.S. dollar and hints at a major restructuring of the global monetary system. At the same time, the world is witnessing what can be called a war of resources. This isn't just about military conflict, it's financial, economic, and strategic. Every nation and institution is acting purely in its own interest, securing assets that hold real, long-term value. This brings us to silver, the metal many now call the new gold. Unlike industrial metals such as copper, silver is both a precious metal and an industrial necessity. Its demand is rapidly increasing due to its critical role in electronics, electric vehicles, solar energy, robotics, and advanced technology. At the same time, global silver supply has been in deficit for several consecutive years. While silver prices have historically been manipulated by large financial institutions, real physical demand is now beginning to expose this imbalance. When demand consistently exceeds supply, price suppression becomes impossible to sustain. Finally, let's look at the multiple bubbles forming in today's economy. Artificial intelligence is undoubtedly the future, but the current valuations of AI companies resemble the dot-com bubble of the year 2000. U.S. bonds and treasuries represent an even larger bubble, built on unsustainable debt. Commercial real estate in the U.S. is also under severe pressure due to rising interest rates. In times like these, understanding the difference between hype and value is critical. History rewards those who protect their wealth with real assets, not those who follow the crowd. The question is not whether change is coming, but whether you are prepared for it.